Hi there, welcome to Kneppy Invests. Thus far in my mission of covering every single company on the ASX that releases an operational cash flow June quarter, I have looked at a few companies I know very little about or I didn't even know existed. That's not quite true for the focus of today's video, which is WestStar Industrial. I do know this company exists. In fact, I became interested in this company almost exactly 2 years ago when they released their Appendix 4C for the June quarter in 2019. In fact, I'm going to touch upon that Appendix 4C because it is quite similar than the June quarter Appendix 4C they released this year. WestStar Industrial is what are they? They're an engineering, civil, construction, and mining services company. A not really sector or sexy sector right now. There are times over the past 10 to 15 years where that sector was sexy, particularly when there is a bit of a mining boom and a lot of miners start spending or fair bit of money on capital expenditure. We are seeing a bit of a mining boom right now, and we aren't seeing that capital expenditure flow through to a lot of the mining services company. That might happen in the next few years, and you do have to be fairly wary when that mining boom does finish. A lot of these mining services company will suffer a fair bit. We did see that about 5 or 6 years ago. Ticker code of WestStar is WSI, and it's sort of, you can understand why this sector is not sexy just by looking at the market cap of WestStar, 27 million, revenue of 54 million, even though that were operational cash flow negative over the past year, $300,000. When we look at their most recent June quarter Appendix 4C, you might understand why some people might be excited about this company, because the enterprise value is right now is at $14 million. And the fact they were operational cash flow positive in the most recent quarter, so I'm giving something away here, they were operational cash flow positive $10 million in one quarter. So you could probably understand why some people are a little bit excited about this company. If you do want to have a look at their Appendix 4C, have a look for that announcement, which was released on the 19th of July. Before we look at the WestStar's March quarter and June quarter Appendix 4C, I just want to go back 2 years ago to when I became interested in this company, and the market also became quite interested in WestStar. Receipts from customers in that quarter was 17.8 million, and they were operational cash flow positive for that one quarter of $7.1 million. And in fact, because of that increase in cash from their operations, and because they actually did do a capital raising, they increased their cash from 1.1 to 10.1 million. And I became quite intrigued by this company at this point in time, and so did the market. So let's have a look at the market reaction to this announcement. This is the daily chart of WestStar Industrial going back to 2019. And the share price actually went into an uptrend in the beginning of 2019, when the share price was around 1.5 cents, and started going very slowly up. And then when they released this Appendix 4C on the 30th of July 2019, the share price rose 59% in one day and reached a high of 5 cents. Usually when I see that sort of reaction from the market, I like to wait a few days just to see how the market reacts over the next, say, 3 to 4 trading days, even longer, because sometimes you'll see a major sell-off like we saw with WestStar during the next few days. In fact, the share price dropped off a cliff. In fact, it went all the way down back to about 3 cents and then kept on dropping after that. Typically, what I like to see in the next 4 to 5 trading days after the release of this sort of announcement is a share price to consolidate and go sideways. So if we did see the share price of WestStar hover around 4.5 to 5 cents, that would have been healthy and would have showed that this Appendix 4C was a much more powerful announcement and had some sustainability behind it. Before we have a look at WestStar's June quarter Appendix 4C, I just want to go back to the previous quarter and just see how the business is performing leading up to the most recent quarter. Receipts from customers in this quarter, $12.1 million. And because a company was spending money on staff costs, $6.1 million, and product manufacturing operating costs, $6 million, that meant the company was operational cash flow negative by $1.1 million. And because they were operational cash flow negative, it meant the cash in the business was falling because there was no capital raisings, no borrowings from banks, and the cash fell from $7.3 to $6.1 million. Around this time, in the next few months, there was a total lack of interest in this company, and you'll be able to see that lack of interest when we look at the charts. So let's have a look at one of the charts, which does not include the current period. I just wanted to look at what was happening with this company leading up to the new financial year, because when we go into the new financial year, you'll see some interesting trading that happened with this company with no news flow. What I've done with this chart is excluded the period from the 1st of July to the current time, which is the 22nd of July, the time I'm doing this video, just to show you the total lack of interest in WestStar during this period. In fact, the share price got to a high of about 3 cents towards the end of 2020 or the start of 2021. And from that high of about 3 cents, the share price had been dropping on fairly low volume. When they released that Appendix 4C for the March quarter in April, there was no interest at all in this company. So a well-defined downtrend up until the start of the new financial year. So around the 1st of July, the share price of WestStar was 1.2 cents. But then something happened around the start of the financial year that got the market interest in this company, and it wasn't any sort of news flow. In this chart, what I've done is just extended the previous chart by an extra 15 calendar days, just to show you the massive increase in interest around WestStar. Not only do you see that in the share price, in fact, the share price rose from 1.2 cents to 2.7 cents in 15 calendar days. We also saw a massive rise in volume. And it wasn't a rise in volume on one day, it was over 6 consecutive days. We saw a substantial higher volume than what we saw over the previous year. So something got the market interested in WestStar during this period. There was no news flow from the company. So the worst case scenario is there was some insider trading. So someone saw the numbers for the June quarter Appendix 4C, and they thought with the share price being so low, this was their opportunity. And that sort of insider trading is illegal. Or maybe someone just suspected that the Appendix 4C for the June quarter was going to be stellar, and it was stellar. So let's have a look at the Appendix 4C to see if it was stellar, which I've already sort of given that away. And here is WestStar Industrial's stellar Appendix 4C. I mean, there was some suspecting trading happening with this company leading up to these results. These results were released on the 19th of July, and that 15 days of trading between the 1st of July and the 16th, when the share price rose over 100%, is a little bit suspect. Particularly, there was no news flow from the company, and there was a massive rise in volume. Receipts from customers, 34.5 million, and that's a significant increase from the previous quarter, which was 12 million. So there are a few questions I do have. What led to this increase? Was it a few contracts, or is this a sustainable increase in receipts that we're going to see flow through to the next few quarters? And because we saw a significant increase in receipts, and even though we did see an increase in staff costs and product manufacturing, we did see a bit of scale here. And because we saw a bit of scale, that meant the company was operational cash flow positive for the quarter of $10.1 million. And when you consider the market cap of WestStar is $27 million, and because the cash on hand has increased from 6.1 to 13.2 million, which means the enterprise value of this company is around $14 million, you could suggest and argue this company is really cheap right now, particularly if you think this sort of momentum they've seen between the March quarter and the June quarter can continue over the next few quarters. I do have questions around that sustainability simply because of what's happened in the past with this company. So let's have a look at their cash receipts history to see if we can see some sort of trend there. This is the cash receipts history for WestStar going back to September quarter 2016. And there is a general upwards trend in receipts, which is exactly what you want to see in any company. But there is two periods here or 2 quarters where we have seen a substantial, significant increase in receipts from the previous quarter. The first one was when I became interested in this company, and that was that June quarter in 2019. The previous quarter, they only received $5.8 million of receipts, and then the next quarter jumped up to 17.8, and we saw that market response. But then over the next 2 years, receipts actually started to drift downwards, and that $17.8 million of receipts was their all-time high until the June quarter of 2021. And that June quarter 2021 saw a significant increase in receipts from the previous quarter as well. So it went up from 12.1 million to 35.5 million. So there are some few questions whether this sort of increase in receipts can be sustainable. I suspect the next few quarters we will see the receipts come down a fair bit. But if you do calculate the growth rate in receipts from the September quarter 2016, you did get a compound quarterly growth rate of 20.7. You do have to view that with a grain of salt just because of what's happened in the previous quarter and that increase. The last thing I just want to touch upon with WestStar is just looking at their weekly chart over the past 5 years. We don't see any discernible uptrend in the share price during this period. We can see the share price get to a high of 5 cents if we ignore right at the start of this period. So a 5-year high of about 5 cents when they released that Appendix 4C on the 30th of July 2019. And current share price is almost at a 2-year high. It's got to about 3 cents, so right on 3 cents right now, which equals the share price high what we saw towards the end of 2020. And just because we've seen a significant increase in the share price from about 1.2 cents to 3 cents over a very short period of time, there could be a fair bit of profit taking over the next few weeks. Now, in saying that, they are in a trading halt right now as I'm speaking on the 22nd of July around midday because of a material contract they have to announce to the market. So it will be interesting to see what that material contract does entail. So keep an eye out for that if you are interested in this company, and it'll be interesting again to see how the market responds to that award, and maybe that was the reason why the share price was running up during the first 2 weeks of this month. With it being the 22nd of July and more companies are releasing their quarterly reports, their Appendix 4Cs or Appendix 5Bs, we're starting to see the to-do list become filled with companies. So these are 4 companies I want to either do a video on or just touch upon, including Pure Profile, Pantoro, which is a company I didn't even know existed, Real Life. I just want to touch upon Legend, and just today on the 22nd of July, we have about 6 or 7 companies that have joined this list, and those companies include Cogstate, Damstra, Global Health, Emerge Gaming. I also want to do Megaport because even though they weren't operational cash flow positive for the quarter, they are very close. And in fact, there's a few other companies that do fit into that category that are very close to being operational cash flow, and that includes Dropsuit, Lark Distillery. I want to do a video on them. Whisper, Next Science, and Limeade. Another 2 companies I want to do a video on. And even Mad Paws. If you haven't heard that company, that is a pet services company. So have a look out for videos on all these companies. I'm not sure I'm going to have the time. I even haven't talked about Max 7, Urbanize, heaps of companies that I want to look at, but I might not just have the time. But definitely these 4 companies I'll definitely do, and any company that is operational cash flow positive for the quarter I'll definitely do as well. That is all I have for this video on WestStar Industrial. $35.5 million of receipts, $10 million of operational cash flow, and a market cap of only $27 million. Looking at those numbers in isolation, you would say this company is really good value at these levels, but I still have some few questions about WestStar moving forward, and the main questions are, can they continue this momentum over the next few quarters? If you have any questions about this company or any other company on the ASX, make sure you leave a comment in the comment section or a question. And the last thing I should say, always say, is I am not a financial advisor. If you do need financial advice for your own circumstances, make sure you seek out someone who is qualified and can speak to you about your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.